Good morning, everyone. This is Marshall Giller bringing you the morning comment for April 22nd. Well, the Greek drama continues. Now the talk is that the ECB is getting worried about the solvency of the Greek banks, as I mentioned yesterday, and may increase the haircut that it applies to collateral that banks submit to get emergency liquidity assistance from the ECB. That might limit the amount of ELA that the banks could get. Now, Bloomberg reported that the Bank of Greece keeps a buffer of some 3 billion euros in ELA funds in reserve, but with Greek residents pulling around 8 billion euros a month out of the banking system, that wouldn't last very long. Greek Prime Minister Tsipras will meet with German Chancellor Merkel Thursday in Brussels in an effort to secure a statement of political support from Berlin. Good luck. Now, as the Greek endgame approaches, it's clearly weighing on the currency. Eurodollar recently has been hitting its daily lows during London trading hours and then hitting its daily highs during U.S. trading hours as the market in Europe reacts to the headlines about Greece and then U.S. traders play the daily range. The 3-month Euribor rate went negative for the first time yesterday, meaning banks are paying each other to take money off their hands. The Euribor futures see it remaining below zero until after the ECB's quantitative easing operation ends in September of next year. U.S. rates, on the other hand, are seen increasing steadily. This monetary policy divergence is what's driving the market and will continue to drive it, in my view. Saudi Arabia ended its bombing in Yemen, which reduces tensions in the Middle East slightly. While oil market participants expect today's U.S. government data to show another large rise in inventories. The combination sent oil prices sharply lower, particularly Brent. This is likely to cause the CAD and especially Norwegian krone to weaken today. Australian inflation, or at least the weighted median measure of inflation, accelerated in the first quarter, and Aussie dollar popped about 40 pips on the news. The market now places a 59% likelihood of a rate cut at the next meeting on May 5th, down from 68% yesterday. RBA Governor Stevens Monday reminded us, though, that further policy easing is, quote, on the table, so I wouldn't dismiss the possibility lightly. As for today's highlights, during the European Day, the Bank of England releases the minutes of its latest policy meeting. It'll be interesting to see if other MPC members, besides the previously hawkish Ian McCafferty, worry about the possible impact of low inflation outlook on wage deals. In such an event, rate hike expectations could be pushed further back and sterling could weaken. In the U.S., the FHFA housing price index for February and existing home sales for March are due to be released. The housing starts and building permits released last week were consistent with a firming housing market. If the existing home sales are also in line with a strong housing sector, this could be dollar supportive. There are no speakers on the agenda today. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.